Good afternoon, everyone, and welcome to the Market Close Report for Tuesday, the 9th of June. And welcome back as well to a brand new trading week. In fact, the Aussie market didn't do so well today, with the market actually falling for a third consecutive trading session, but it could have been a whole lot worse. We only saw the ASX 200 dipping by around 20 points or 0.25% to 8,604. In fact, in the opening 10 to 15 minutes of the trading session this morning, the market was down by as much as 1.6%, which means at that point in the prior 3 days, our market had fallen by about 3.2%. That's around 300 points shed from the market's value. Now, what seemed to help our market actually steadily eat away at those declines over the course of the afternoon were a few things that seemed, from futures pointing to a better start in the United States tonight. We also had some calming in the Israel-Iran conflict, which certainly escalated in the prior days. That seemed to help. And what didn't hurt today as well was some better trade data in China. Now, the key reason why markets actually fell so heavily in the open today, though, was the fact that our market was shut yesterday for the King's birthday public holiday. So that means that we were playing catch up with the rest of the world that did not do well in the prior session at all. So Friday night, we had the US market falling quite heavily. Putting some numbers around that, we had the S&P 500 down 2.6% Friday. That was the biggest daily sell-off since October 2025. That was led largely by tech stocks. So the tech-heavy NASDAQ was down 4.2% in one session on Friday. And then that seemed to spread to markets across Asia yesterday as well, which were open for normal trade. So Japan's Nikkei, for example, was down 3.85%. Hong Kong's Hang Seng fell for a fourth consecutive day on Monday. And then we had China's Shanghai Composite down in the order of 1.7%. So today was really our first chance here in Australia to react to that news and also to the declines. Now, the catalyst for those declines came in the United States Friday night in the form of a stronger than expected update on jobs growth in the US, which was actually twice as strong as expected. There were about 172,000 jobs added in May. And not only that, the April read on employment was also upgraded significantly as well. So what this effectively did was it raised the market's expectations that the Federal Reserve might need to raise interest rates in 2026, in this calendar year, and also for the time being has taken off any chance of an interest rate cut this year as far as how markets are pricing this in. So this was one of the reasons why markets have been quite volatile, and it's taken a bit for us to catch up to the news. Now, as far as sectors go today, there were four sectors that fell. We had energy stocks down slightly, the materials, which also fell quite heavily today, down in the order of 2.3%, the utilities and tech, which also went backwards. Now, of those, as you can see there, the materials certainly by far the hardest hit. Now, this has had a bit to do with the expectation of potentially a rate hike in the United States this year. That saw the US dollar has certainly strengthened quite a bit, and then a bunch of commodities went backwards, and that included gold and copper and iron ore, which has fallen for 4 straight days. Energy stocks have been quite messy today. We had improvements in oil prices in the prior days because of escalating conflict in the Middle East, but then they were down quite heavily a day earlier, and then they fell again in Asia trade today. So that was a reason why we had quite messy performance there. As far as the winners on the market today, one of them was IDP Education. It was up about 5.3%. Received a broker upgrade this morning, a reminder that this was actually one of last month's worst performers. It shed around a third of its market value in just 1 month, and that was partly because of concerns of near-term pressure from weak visa volumes. There are fewer international students being placed in education facilities, and also fewer people sitting for those English proficiency tests that it's one of the world's largest of. Coles in the defensive space there in supermarkets was up around 1.8%. We had CSL also lifting about 1.6%, but context is always important there. It's had a good couple of days, up 1.5% today. It was up almost 6% on Friday as well. And a broker today suggested that perhaps the biotech maybe past the worst of its profit pressures, but you've got to remember it still is down 42% this year, and healthcare stocks are easily the worst performers on our market this year as well. And then oOh!media up in the order of 9.5% today. Had a brief pause in trade this morning. It responded to media reports in the Financial Review regarding some takeover interest, but ultimately in a short statement, it did confirm that it received a conditional non-binding offer from Bain Capital worth about $765 million. So this means there are a few interested parties now And I guess more interest in the stock from takeover interest wise has helped the share price improve today. Now, as far as the losers are concerned, really a bunch of mining and energy stocks made this list. So we had Emerald Resources, the gold miner, down about 9%. Paladin Energy, that's had some really significant moves in the past week or so, down in the order of 9% today. It did lift about 11% in one session last Wednesday. We had BHP Group down as well, as the iron ore price has fallen, but copper as well went backwards. So got to remember that a week ago, just last Wednesday, BHP did hit a record high. And outside of resources, it's a bit of a change. We've got REA Group, which is down in the order of 3.9%. So this is the group behind realestate.com.au, and it received a broker downgrade today, basically saying that a potential softening in the property market, a few rate hikes that we've had this year, the potential reduction in property prices because of changes in tax when it comes to properties in the property market, that also has seen REA Group take a little bit of a knock. Now, we had a bit of economic news around today as well. One was an update on consumer confidence for the month of June, and that basically saw that confidence levels dropped back by about 2.9% over the month. Now, this is near the weakest reading in the 50-year history of this survey by Westpac. Pessimists outnumbered optimists by nearly 20% in the survey, and cost of living issues remain front and center on that front. Then we had an update on business confidence as well for the month of May, which was kind of mixed at the end of the day. Now, if we look forward to the rest of the week, there will be plenty to watch this week. In the next couple of days, there is going to be some strategy briefing days by Wesfarmers tomorrow, and then we've got Super Retail Group on Thursday. So the type of thing that when there are surprises as far as the outlook or any updates to strategy or plans that can move share prices around. We also get some inflation data out of China tomorrow, and later on this evening, there will be a few bits and pieces out as well on the trade balance and existing home sales front. Now, as far as currencies are concerned, we've got the Aussie dollar sitting at about 70.6 US cents, a little firmer against the euro and the Japanese yen as well. Have a great evening, everyone. A fantastic week. Make sure to tune in to the morning video tomorrow.